What we did when this outbreak started is that we decided to lengthen our Chinese New Year holiday by another week. But actually, yesterday we started up production again in our plants in and around Beijing cautiously. So we're kind of feeling this out, and I want to really applaud all the colleagues in China that have made this possible to get to this point. But it's too early to say where this is going to end up. But a cautious restart of our production as of yesterday.
And did it already have effects on your first quarter so far, if you look at what happened to the production line?
I think it's too early to seriously say what the total effect of this will be. Of course, we lost that week of production that we had, and our dealers were closed also during that extended week. How this move forward over the next few weeks, couple of months, too early to say.
There are many investors who are kind of disgruntled with your company's performance last year with the 3 profit warnings in a row, more or less. So how do you reassure investors for this year that you are on a more solid footing?
We had profitability being affected by what we call material adjustments. So topics that rain from issues that happened in the past, and that's what led to these profit warnings. But even if you take those out, our underlying performance was not as robust as we would like it to be. And that is why we're taking measures both on the cost side in terms of efficiencies and restructuring to strengthen our profitability going into the future.
Let's look at the legal costs, because if you look at the free cash flow, which then eventually also determines the dividend, that was clearly hammered by those legal costs. So are you confident that we have seen the peak?
We're looking at our net industrial liquidity, and we have said we need at least 10 billion in net industrial liquidity. We ended last year with 11 billion, and we're managing our cash flow very carefully. So we will improve our operational performance, improve our cash conversion rate, also look at things like working capital to protect cash flow and make sure that we stay in a healthy position there.
So 2019 clearly wasn't a good year. So what is 2020 like for Daimler, and what are your biggest plans for this year, i.e. also cutting the variety of models, etc.?
2020 is a combination of restructuring, so we still have some heavy lifting to do, but it's also a year where we're investing very heavily into new technologies. We're going into electrification, we're going into software-driven architecture, so the transformation of the auto industry is at full force, and we're making big investments into those new technologies. But at the same time, it's going to be restructuring, and we're going to have to take cost out to unlock cash flows that we need for these future investments.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.